Hello guys, welcome back to the Lumley trading video. In this one we're going to be doing some in-depth stock analysis on Bed Bath & Beyond, ticker BBBY. So obviously we did crash down to a 52-week low of $1.27. Since then we did actually have quite a nice bounce off that level. We did push to around $5.50. So again, a good kind of 400% pump off that level. Now, we're already starting to see volume die out, volatility starts to slow. So what do we really expect going forward? And really what this was, I don't even think it would be a short squeeze. It would kind of just be a lot of bag holders on, probably a lot of talk on things like Reddit. And you kind of just got a small pump. But yeah, I wouldn't be paying too much attention to that. Not something I'm looking to trade. Again, the only way I trade these, if you've been watching the channel for a while, you know I don't like trading the momentum. Because again, really, it is a gamble when it will stop. You are going to kind of be bag holding. Well, you will probably get left bag holding unless you have your proper stops. But the way I like to trade these, like you would have seen on GameStop, like you've seen on Bed Bath & Beyond before, was when we just kind of pump to these really extremes. And to me, we'll go over what these extremes are in the video. But when we get to these extremes, really the way I trade them is usually just through credit or debit spreads. And the reason for that is you can play the direction, you have a defined risk. Again, you usually get about a 1-to-1 risk to reward, but on something like this, you know it's not going to stay at these highs. So really, I mean, a 1-to-1 risk to reward, I'm very happy with it because, again, I know I'm going to win much more than 50% of the trades I take in those positions. So we are currently at 380. Quickly go over the downside first because there's kind of less to go over. Again, the supports we have are statistical means. So that's going to be 290 to around 75 cents. As you know, if you watch this channel, statistical mean between these ranges, I never look to trade because, again, it's a lot more of a gamble. My trading edge isn't there. One of my trading strategies and my trading edge on that strategy is trading the mean reversion. So I want to be away from that mean. So for me to trade within there, again, there's no edge for me. So not something I like to trade within that. If we broke to the downside, again, to me, there isn't any supports because we can see our deviations turn negative. So again, to me, there is really no supports. The only way I look to trade kind of if we break further down is if I can find some cheap calls, relatively far out expiries. I'll hold them again. If I lose the money, it's not going to be a massive amount. I'm not too fast. But if this stock does pop, then obviously there's money to be made. But really what I'd be focusing more on this stock is if we break to the upside. Again, I don't hold this stock. So these kind of levels don't make or kind of affect me too much. But we do have resistances at 210 and 725. So if you were kind of bag holding or you may be holding a bit of position now to try and catch the trend, I would be watching out for these levels. Again, you kind of see we pull back on the 610. But if we break through, 725 is that next level. We do have next levels coming into around 950. Breaking through there would be $13. Now, $13 is when I would start getting involved in this stock. If we break up to $13, this is when I would start doing those option trades I was talking about before. So going into the debit or credit spreads, again, depending on the premiums is what side you pick. But yeah, $13 because that's two deviations on our 6 month and 1 year chart. So again, it's going to be a strong level. I wouldn't expect it to stay above there. So that's where I'd kind of get my first set of option trades in. If we continue up, really I'm just going to hit inside probably at every next level. So $16, $19.75 and $25 are all levels I'll be hitting them in. Again, I'm still not looking to risk a massive amount on it because the problem with it is, especially if it's the kind of debit or credit size, is again you're still going to have money in the trade. So let's say at each of these levels I throw in $1,000, it's still going to be $4,000 in the trade. If I don't have many other trading opportunities, cool, I can let it run a bit more. But if I want to free up that capital again, I don't want to be holding it for ages. And so again, that's the only thing why I probably don't put too much into this trade because again, sometimes it might take a few weeks for their stock to fall. And if I want to do other trading opportunities, again, that may hinder that. But these are the main levels I'm looking at. Again, really, if we get a pump or short squeeze, that's what I'm looking to trade. I'm trying to play the reversal on that. Again, but I want to find risk. It's kind of stupid. At least in my opinion, to kind of short the pumps because, again, you never really know where the top is going to be. And, again, if you're shorting a stock, you have kind of a limited risk at the end of the day. If you shorted at $5, you could have been down 500% on that short. So that's why I prefer trading these through the option side. But anyway, I hope you enjoyed the breakdown on Bed Bath & Beyond. If you did, why not drop a like and subscribe and check out this analysis video.